Hello and welcome to Business Insider with Mario Toneguzzi on MegaPixx Media. Joining me today is Milke, who is Executive Director of Research for the Canadian Energy Centre. Thanks for joining us today, Mark.
You bet, Mario.
Well, you folks put out a report today, a research paper on Canada's GHG emissions intensity record was the report. Tell me what the key findings were from your research.
Sure, maybe a bit of background on what this is actually, right? When you talk about carbon emissions intensity, it's a little different than simply looking at carbon emissions. Are they going up? Are they going down? Comparing industry to industry. And often that's only what you hear in public policy debates and in political debates and the rest of it. So what we did is we said, look, Canada is a cold northern country. It's got a growing population. It has a growing economy. What happens when you look at carbon emissions intensity? In other words, you correlate those factors, you take those factors into account. And it's a bit like, say, the automotive sector. If you said, the automotive sector is using 20% more steel than they did 10 years ago, you'd say, well, that's not very efficient, except of course, if they've doubled their car production and are only using 20% more steel, then you get a sense of, oh, they're being much more efficient. With the product that they're using, steel in that example. Well, in the oil and gas sector, it's the same thing with carbon emissions. Carbon emissions, have been declining when you measure them by intensity, right? In other words, the oil and gas sector is doing more with less, or Canada is for that matter. So we looked at carbon emissions, and it gets fairly wonky and technical, but correlated to the economy. And for every $1 billion, for example, that the economy grew, we're actually down about 30% per $1 billion in terms of carbon emission usage in the country. So that's overall, that's the big statistic, right? Down 30%. And that's impressive because we do have a growing economy and we do have more people in the country. And then you look at per capita statistics, and it's the same thing. You find that per capita, we're down about 14% compared to 20 years ago, for example. In terms of per capita carbon emission. So that's what we mean by, and that's what is meant by carbon emissions intensity. And it's one way to look at this subject, as opposed to saying, are your absolute emissions going up or down?
In that report, is there any correlation to what's happening or comparison to what's happening elsewhere in the world and how Canada is faring there?
Absolutely. So if you compare us, for example, to some of the big oil producers or natural gas producers around the world, whether it's Qatar, whether it's Saudi Arabia, and so forth, or in some cases, Venezuela, that sort of thing, what you find is that we're favorably compared. The statistics, for example, I don't want to bore your listeners with too many statistics, but we're down compared to other countries. In many cases, we're down compared to Russia, we're down compared to Saudi Arabia on emissions intensity. We're also down vis-a-vis Qatar. So even when you do the international comparisons, the intensity, again, the kind of the bang for your buck you're getting, so to speak, we're down compared to other international competitors in oil and gas.
So why is that happening? Why are we seeing the decline?
Well, a much more efficient use of extraction processes. For example, the oil sands is a good example of what's happening, where they're down as well over the last 20 years, in the last 10 years in particular. And it depends on the estimate you look at. There's estimates from IHS Markit that say we're down in double digits. There's estimates from BMO that also put us in the ballpark. So it's that oil sands companies, for example, are much more efficient in terms of their CO2 use than they used to be. And there's some reason to hope, based on the forecasts from some of the organizations I just mentioned, like IHS Markit, that's going to continue in the next 10 years as well. Our study looked back basically 20 years, depending on the measurement available, from 2000 to 2018 in some cases, on international comparisons, 2000 to 2019 in terms of domestic numbers that we could find. But they all show the same thing, basically, which is that Canada's carbon emissions are down by 30%. When you look at economic growth, you take into account again the every $1 billion in extra economic growth, or on a per capita basis, down 14%. So the emissions intensity record is pretty good, and that bodes well for the future. I mean, I think it's a it's a fair way to look at carbon emissions because you really can't compare Canada, say, or you shouldn't compare Canada to a country like Japan that has a stagnant or declining population. You shouldn't compare Canada to, I don't know, Argentina, where economic growth is anemic and often in reverse. So you really have to make sure you're doing apples to apples comparisons. And when you take into account economic and population growth, which our study did, then you get a better comparison of how we're doing, how much more efficient we're being with carbon.
So why, Mark, is this important to know?
Well, otherwise, people will say, look, your per capita emissions, or your absolute emissions rather, are high compared to some countries. Well, yes, because we have an oil and gas sector, and yes, because we're a northern country. But the question is, and we have a pretty high performing economy most years. So if you don't compare to those factors, then people get the wrong idea about Canada's carbon emissions and the oil and gas sector's carbon emissions. If this keeps going down, in the last part of the paper, which you can find at the Canadian Energy Research, Canadian Energy Center Research, portal, on the front page and on the research page of the website, if you look at that, then you're going to find that we're doing very, very well vis-a-vis other countries, but also it gives you a sense of where we could potentially go in the future. So in the last part of the paper, if this continues on this path, these efficiencies with carbon emissions, you're going to find we're within 2 to 4%, for example, is one estimate of conventional oil produced in the United States. So on emissions intensity.
Yeah.
So that's pretty good. And again, if people are concerned about CO2 emissions, investors and so forth and the like, then it gives them a chance to really compare apple to apple comparisons.
Okay, super. Anything else? Anything else, Mark, you wanted to mention?
Well, I think this doesn't get much play because it's a difficult concept to wrap your head around, emissions intensity. But again, it's akin to saying, looking again at the automotive industry and saying, well, you're using a lot more steel. Yes, but we're producing a lot more cars, they might reply. So same thing with the oil sands, same thing with oil and natural gas across the country. Compared to most countries, our emissions intensity is heading downward pretty significantly, and is in fact among the lower, among the lowest among some of the countries that we measured, some of our major oil and gas competitors around the world on that score. So it's pretty encouraging news if CO2 emissions and intensity is what you're looking at as opposed to just absolute.
Yeah. Okay. Super. I know you're a busy guy, Mark. What's next on the plate that's coming out from your research side of things?
Well, in a couple of weeks, we're going to look at oil and gas demand in some of the most burgeoning continents, you can put it that way, Africa and Asia, where population growth has been soaring and looks to continue to soar, and so too has been economic growth. So look for that in a couple of weeks, in early August.
Okay, super. We'll chat with you then. Thanks very much. Thanks for joining us today, Mark.
You bet.
Okay, that was Mark Milke, who is Executive Director of Research for the Canadian Energy Centre, based here in Calgary. This has been Business Insider with Mario Toneguzzi on MegaPixx Media. Thanks for joining us today.